I think, the main thing is you do have to have a good relationship with your advisor. If you've lost that ability to communicate, you need to be able to communicate. You need to be able to let them know whether or not you're happy with what's going on. If you have questions, if you call and you don't feel like you're being welcomed, your questions are being welcomed, then it might be a time to move on. And again, when you're looking for a new advisor, again, take your time, interview a few people, make sure they fit and you're comfortable with how they work and what they do, and again, how they charge, and all those types of questions. Be wary of anyone who's starting to push product right away. If they're starting to talk annuities or life insurance or any of that stuff, in too much detail, trying to sell you stuff in the first meeting, I think that's a warning sign. Anyone who tries to get you to actually maybe even commit or sign or write a check in that first meeting, maybe a little too eager to push business through and move on to the next client. So those are a few things to be wary of. You always need to be notice when if you're into a product or you're into an advisor who sells products, what any surrender charges are, what any costs of maybe moving some of that money could be. I don't want clients to be surprised any more than you want to be surprised. So if I'm gonna recommend that you change something, I'm gonna want to know the costs and tax consequences and anything else that could go wrong with that transaction. So definitely I would help you through that process so that there would be no surprises and that we can make the best decision.